The U.S. nat gas tests new lows as traders remain focused on bearish weather forecasts and high supply. Gas prices have been on a downward trajectory for 8 consecutive sessions, influenced by less than expected heating demand and mild weather forecasts through early November. Although there were near-record high volumes of gas being supplied to LNG export facilities, futures dropped by 3% to reach a 2-week low. Gas flows to the 7 big U.S. LNG export plants rose to 13.6 billion cubic feet per day so far in October, up from 12.6 billion in September. Weather data indicates a warmer than expected outlook across most of the U.S., with a brief spell of colder air over the Great Lakes and the Northeast for the weekend. Light to seasonal demand is expected, suggesting the gas market might not see a significant boost in prices. In October, production in the lower 48 states averaged 103.6 billion cubic feet per day, surpassing previous records. Analysts forecast U.S. gas demand, including exports, would ease from 97.6 billion cubic feet per day this week to 96.9 next week, with milder weather coming before soaring to 105 billion cubic feet per day in 2 weeks, once the weather turns seasonally colder. European natural gas futures climbed to €52 per megawatt-hour, marking a more than 30% increase since the Israeli-Hamas conflict began on October 7. Broader concerns are looming over the potential escalation of the conflict and the prospect of Iranian involvement, raising security concerns for Qatari LNG vessels passing through the Strait of Hormuz. Israel has already closed a significant gas field, potentially impacting liquefied natural gas exports from Egypt, although Egypt's gas shipments to Europe represent a relatively minor share of the market. Nevertheless, the upward movement in prices has been restrained by abundant natural gas supplies and mild weather forecasts. In several parts of Europe, including France and Germany, temperatures are expected to return to normal or even surpass average levels in the coming days after a period of unseasonably cold weather. Simultaneously, European storage facilities in Germany, France, and Italy are nearly 98% full. Given the prevailing mild weather forecasts, increased storage builds, and declining futures prices, the short-term market sentiment leans bearish. From the technical point of view, nat gas is moving towards the nearest support level at $2.85 or $2.80. Nonetheless, even if we were to break below the 50-day moving average, it is likely that we will continue to see a lot of value hunting. If we manage to break above the 200-day moving average once more, the market is likely to trend higher. Thank you for watching. Please don't forget to support the channel if you enjoyed the video. See you in the next one.